If a client contacts me and says, hey, Gemma, I found this property, and if it was bought in that end of that 2021 kind of peak COVID time, my heart kind of sinks a little bit because there seems to be a bit of a disconnect with what people have paid for properties around that peak COVID time and now.
Kia ora, and welcome to a special guest edition of the New Zealand Property Market Podcast, brought to you by Cotality. I'm Nick Goodall, Head of Research for Cotality, and today I'm joined by Jemma Scott-Davidson, owner and mortgage advisor at Loan Market in the best little city in the country, Whangārei. Jemma, thanks so much for coming on the show. Very excited to have you on. How are things up there in the winterless north?
Very good, thanks. Very winterless at the moment. We haven't had any spots of rain for quite a while now, which has been pretty awesome.
Good to hear. For our regular listeners, they'll know I'm from Whangārei, so I'm hugely biased to the beautiful part of that country. And my family's all back there too. And when I've spoken to them, maybe not recently, but over the summer, they didn't seem to think that has the greatest summer. So I'm glad you're getting some of that made up for in the last few months anyway.
Yeah, it's so weird. Summer definitely wasn't summer this year, but lately it's been really nice. We actually got the boat out on the weekend, which was pretty awesome. I actually caught a snapper. It's the biggest snapper I've seen in a couple of years actually, which was really nice. It's actually, yeah, it's really good at the moment. It's the weather's really settled.
Yeah, I think that's what that autumn seems to bring, right? But a settled weather. We certainly had a decent autumn here in Wellington too. So, but you can make the most of it up in Whangārei because you can get out there on the boat and actually go and enjoy it. Whereas here it's way too cold to even consider going near the water. So, yes, I do miss those days. That's for sure.
Yeah, definitely. I can imagine. I spent some time in Wellington and I remember the weather. I remember how cold and windy it was and I got used to it. And when I used to come back to Whangārei on holiday, I was always surprised that it wasn't like that everywhere because you kind of get so kind of institutionalized to that wind and that cold. But yeah, you kind of don't realize the rest of the country isn't actually experiencing that.
No, that's so true, so true. But look, we're not here to talk about Welly, so we will move on. Look, I'm really looking forward to hearing what's going on back there in my hometown. But before we do get into all that nitty-gritty of your day-to-day conversations and what's happening up there, I'm keen to learn a little bit more about yourself anyway. Sort of, I suppose, how long you've been mortgage advising itself, how long you've been in the industry, and maybe a little bit personally about what you get up to on the weekends as well, what keeps you busy.
Sure. So I haven't been mortgage broking for that long, probably about 12 months, probably just over 12 months ago, I started my business. Prior to that, I was in banking and I actually left school and started an accounting apprenticeship or like an internship, and I lasted for about 6 months. And it was okay, it was good and I learned some stuff, but it just wasn't for me. And I applied for a job at a local bank as a teller and was successful and I never looked back. So basically I worked in banking from the age of about 18 right through until last year, so just over 20 years. And I worked in all sorts of different spaces. Where I had the most enjoyment was in commercial lending. So that was where I kind of ended up before I left the bank. And when I was there, I was really loving my role. I was loving my team. Work was like a family for me. But I was kind of at a stage where I just wasn't sure that that was what I wanted to do for the next 20 years. I was really comfortable, really good at what I was doing, but just kind of felt like I needed something more. So I rang an old boss of mine who had made the jump and had gone to Loan Market and talked to her about how I was feeling. And she was really positive about, working for Loan Market and kind of her experience because obviously she'd been banking and kind of done what I was looking at doing. So basically off the back of that conversation with no research, just left the bank, left my career and set up shop basically with no customers and kind of nothing to start with. And yeah, basically embarked on a really steep learning trajectory, which I've been on for the last 12 months and has been extremely rewarding personally and professionally. So I guess in addition to that, I've got a young family. So I've got 3 young kids, so 3, 6 and 8. They keep me very busy. When I'm not kind of with my kids and I'm not at work, I'm really passionate about sport in the community. So I'm an avid CrossFitter. So I've been doing CrossFit. I think I started around the time I had my son. So that would have been about 9 years ago. And the main reason for that was the timing of the classes kind of worked in with his sleep schedule and stuff like that. But I really found my passion there. And that's kind of branched into weightlifting. So I kind of focus more on weightlifting now, probably more than CrossFit, because I kind of see that as probably something that I'm going to be able to do for the longer term. But yeah, so that really fills my cup. And yeah, I guess in addition to that, I sit on a couple of different boards on a school board, and then I do some stuff with the local athletics community up here too. So just, yeah, across a lot of stuff, really busy life, but yeah, really, yeah, a lot going on, but all good, positive things.
How do you find the hours in the day? That sounds like a pretty intense time, I tell you what. And to then go and start up a whole new business in midst of all that, especially having a young family, I don't quite know how you've done it. But of course, I know that, having a business like Loan Market to assist you through that would have been huge. So you can get it from that perspective. But man, that's proper impressive. So how has the first sort of 12 months gone in the new role, in the new job, starting up a business?
It's been really good. So I guess I probably didn't know, like I knew I wanted change, but I didn't really know what that was going to look like for me or what it actually meant. I just knew that I wanted it. So I kind of like made that decision and then did it, but didn't really kind of think through what that actually meant in terms of what it would feel like. But I would definitely encourage anyone that's kind of at that place where you're comfortable, but you don't want that comfortable kind of style anymore, to do it, to just kind of make that jump. So there's been a lot of growth and a lot of opportunity to kind of work on stuff that I might have not necessarily have had to do when I was at the bank. So I guess even like this conversation, like doing this, chatting to you, is probably a really great example of that, because there's always kind of in that banking environment, I had the opportunity, like somebody else could do it. I can kind of pick and choose what I wanted to do. It's really easy to sit in your kind of comfortable space, I guess. But so for me, that's what I wanted. I wanted to work on the things that I wasn't good at and to really kind of grow into kind of who I felt I could be professionally. And through that, I've built some amazing relationships with customers. I've had some really cool success stories with transactions. So I call myself the bank manager that doesn't work at the bank, because it really is about relationships and helping people. And I guess kind of being able to live my values and kind of make decisions for myself and kind of incorporate, what I think is best into decision making that ultimately benefits people has been like amazing. And yeah, I can't kind of say that enough, but yeah. So kind of learning that I had that in me and I had the opportunity to kind of do that for people has just really been awesome.
Oh, absolutely. I think it's a constant thing that comes up, right? Is that, the people in your industry are ones that, just want to help people out. And any opportunity you can do, or the way that's going to help you to do that the most and maybe be closest to it, right? To have that personal connection with people absolutely makes sense, especially for someone like yourself who's obviously very involved in the community. And I'm sure that would have helped you to get established, right? You've already got a lot of people that are in the industry or in the area that know you and know who you are. And that can obviously help to get established in that sort of industry as well. So absolutely makes sense. And yeah, great to hear. It sounds like you're thriving. All right, well, let's get into a little bit of chat about the market itself. I think we'll stick to residential first up. I think that's typically the area that most people are interested in, but I am keen to branch into commercial at some stage too. I think that business side is of real interest to many people. But yeah, tell me about what's happening up there in the actual market. That when I look at our data, it sort of says, I don't know, I suppose you could put it two ways. Not much is happening, like things are kind of tracking sideways, but then you could also say it's a bit of a mixed performance. There are some areas that are doing okay and some areas that aren't doing so well. What's your sort of experience when you're dealing day to day with some of the deals that people might be doing to secure a house?
Kind of think the way people seem to kind of go, oh, it's either boom or bust, like where people are doing all these crazy things and, the market's really hot and, people are paying so much money for all of these houses, or there's like nothing happening and it's really bad. But I actually think that like the market we're in at the moment, I actually would describe it as a normal market. The people that I see are buying and selling for normal reasons. So I see people buying their first homes. I see people relocating for work. I see people buying houses because they've got a growing family and they need more bedrooms, or their kids might be getting older and are looking to start school and they need to relocate to a specific area because they want to be zoned for a certain school. I see people buying rental properties, especially rental properties where they can add a little bit of value to the property so that, maybe later on they might be able to get a little bit of capital gain. I think fuel's playing more of a part in terms of buying patterns too. So I think, considering your daily commute is becoming more kind of topical in the current environment. I'm seeing a lot of properties. I think like in Whangārei, the sweet spot, there's still a lot of activity between sort of 650 and 750 in the market. So I think that 650 to 750 probably encompasses a lot of that kind of people buying and selling for normal reasons type scenario.
Yeah.
I'm not seeing a lot of coastal at the moment, but I kind of feel like that's pretty normal for this time of year. Like, yes, the weather's more settled. We kind of talked about that at the beginning, but it's colder. And I think naturally people kind of aren't really in the market for coastal at this time of the year. I've got lots of clients that are pre-approved to buy at the moment, and a lot of them can't find a property, it's hard to to watch, to be honest. I've got some clients who I've been working with since January, and they've been trying to find something around that mil mark, and that's a real problematic kind of price point at the moment in Whangārei. I'd say between 800 and a mil. So the jump, I guess, from that 650 to 750 property to what you would expect to get for, say, $1 million is quite different. But it's not really reflected in the stock that's on the market at the moment. So there's a lot of overpriced stuff, I think, around that mil mark. And then because there's that overpriced stock, when something comes on that's actually good value, because there's a little bit more competition, it's actually going for more. So a lot of those buyers, and I'm seeing it with some of my clients as well, that they're missing out because of that competition. Anybody that's bought probably, or if a client contacts me and says, hey Jemma, I found this property and I'm really keen, and I look at it because I've, you can go get your property stats or whatever, I'll go and have a look. And if it was bought in that end of that 2021 kind of peak COVID time, my heart kind of sinks a little bit, because there seems to be a bit of a disconnect with what people have paid for properties around that peak COVID time and now. So some of those vendors have expectations that their properties are worth more because they've held on to them for the last, 5 years odd, where in actual fact a lot of that stock is the same or maybe slightly less. So a lot of vendors aren't accepting what buyers are willing to pay for those types of properties bought in that kind of period. That would probably kind of summarize, I guess, the property market in terms of being kind of high level.
I think it's a really interesting summary, especially I think when you go back to what you said at the start around people are in the property market for the right reasons. It's sticking back to those fundamentals. What do I want? I want a roof over my head. I want a property that I can own and maybe change, have a growing family in, or they're looking at that upgrading a property, moving to that next tier of the market, or hopefully from an investor's perspective, they are looking to buy and hold long term. They're buying, they're hoping to get some yield, and I'm no doubt that cash flow is important to them, but of course they're hoping to hold long term, create some equity by paying down that mortgage. Yes, there's always a hope for some long-term capital growth, which I think will come. But of course, after being in a period where it's been relatively flat or declining in some markets, it's hard to sort of have that same expectation at the moment too. So I think that mostly backs things up. I had a quick look at the listing situation across that area as well, and it did look like there was declining choice, and it wasn't quite as prevalent as it was over the last few years. So I think that absolutely, backs up what you were saying in terms of people struggling to find that property to buy. And yeah, that standoff is just absolutely real of what we've seen as well, in terms of, you've got all these people with these high expectations not wanting to sell at a certain price, so they end up just waiting and holding on even longer. And I think that's also led to a bit of a standoff in the market where, as you said, those buyers, those vendors having to trade off and get to a price that actually works for both parties can take some time. And that's where we see those sort of days to sell blow out as well. I know one of the questions we're always going to get when we talk about markets like Whangārei, particularly those that are close to the large centres like Auckland, do you see a lot of Aucklanders coming up and buying? Maybe it would be those coastal properties, which you said weren't quite as active these days, but do you deal much with the Aucklanders who might be looking to buy a holiday home up north and checking out what their options are? Or do you think that's also died down, and maybe not just seasonally, but actually just died down a little bit while the economy isn't quite as strong?
So I haven't actually seen any of that in my market. So I feel like those buyers are probably holding their cash a little bit closer to their chest at the moment. I think, the let's go for a Sunday drive and see if we can find a nice holiday home while we're away. Those buyers aren't in the market at the moment. And I think that's probably the part of the market that's probably suffering the most in the current climate, to be honest.
Yeah, pretty hard to justify going and buying another house when, your current house might not be doing so well. You're concerned about your job, right? So I think that definitely stacks up. I had to have a look at our data to see what it said, because as I said, I knew we would get this question, or we're going to get asked about it. And it looked to me like about 5% of all sales in Whangārei go to Aucklanders. And that's pretty consistent over time. So I think it's probably pretty regular. They could be moving to. It's not just, all people just buying a holiday home or buying an investment property, but it sort of looks like people that own an Auckland, they also look at getting one in Whangārei, either to trade or to move to. It's a pretty small part of the market, but it's not negligible, right? So I do think it's real in people's experience when we talk to them about it. Yep, Aucklanders do like living up north, and they like living up the Coromandel, all those places, but it's not like it's taking over the market. So it's a nice one to try and, throw some data to, I suppose. I wonder about the other part of the market too. It's good to get the idea of, where that sweet spot is, the affordable part of the market. What about new build? What sort of developments happened across the region that you might have been involved in? Has there sort of been more of that lately, or have you seen that slow down as well? I think construction's obviously always a pretty hot topic, really. We've seen some consents, across the country start to increase. What's it like up north? Is there sort of still a lot of building going on?
Only I'd heard that there were a lot of building consents being issued up in Kaitaia, but I'm not necessarily seeing that in terms of the deals that I'm writing. Building seems to have come down in costs, which is nice. There seems to be, you can actually kind of build something you can sort of buy a bit of land and build something for $1 million now, which there was a time there when that just wasn't possible. And I think for those that are looking to do that, there's some good sweeteners in terms of offerings from the banks around discounted rates and things to do that. But I'd still say that construction's pretty weak at the moment. Like, I'm not doing a lot of construction. I think people are still kind of seeing more value in buying something compared to the investment of the section. Land prices, it's relatively high to the cost of the build. I think I've had a few clients look around at sections, and I had one who was just going to buy a set. I said, mate, you got to, this is what you want to spend. You really need to just call a builder and just tell them what you want, and can you do what you want for what you're wanting to spend? And she said, yeah, I will. And she did, and she was quite disheartened because by the time she factored in the cost of the land, she couldn't really do what she wanted to do. I think the word he used was unrealistic, which was, but that is a factor. And I think, if anything, I'd say there's probably a little bit of education that needs to go into that market, especially, people want to build their first, like if you're building for the first time, especially, it's really challenging if you don't have all that information. But it's a bit of a chicken and egg too, right? Because can I build on this, and can I build on this site, and what it's going to cost, and what are the other factors that I need to consider in terms of the earthworks and what facilities are at the boundary, and do I need tank or am I on town supply? All of those factors, there's kind of a lot that goes into that conversation. So I think that in itself puts people.
And kind of fair enough, right? Like I say, buying your first home can be a daunting prospect on its own. And that's just buying an existing home and having to go to maybe an auction, or at least having to put a tender in or whatever. There's still plenty to go on right there. You're engaging with lawyers and accountants and your finance and all that sort of stuff, let alone, as you're saying, to consider what does this look like if I'm buying land first, and then have to engage builders and take time, and like I said, earthworks, everything else. It's just a whole nother level of information, right? So not to say people can't do it, and they should definitely research all their options. And I'm sure they'll be really satisfied when you get to the end of that process. But it also takes time. Interest rates are going to change over that period as well. So, there's just all that extra level of conversation that needs to happen. So kind of makes sense that, especially once we have a few more uncertain things go on in the environment, that people might sort of start to pull back from that one as well and go, you know what, I can see and touch and feel this actual house. That's going to be a bit more, tangible for me than actually engaging in that whole new build one, which I think, is not ideal. We want people to be going into that space, but yeah, we need a better economic time, I think, for that to really, flourish. And hopefully that time's not too far away. I'm not going to count my chickens, of course, but certainly looking like things are looking a bit more likely from that economic perspective and that geopolitical things at the moment. But I know it's a changing daily situation, so we're not going to get too excited about that one. Just before we move on from property types and things like that too, I think the other thing people think about is that kind of lifestyle market. You maybe move to the outskirts of Whangārei, you get a bit of land. Do you still feel that there's a bit of appeal for that, where people are moving a bit further away, wanting to get out of town, and that might be out of the Whangārei town, or it might be from someone like Auckland? Do you deal much in that sort of larger piece of land with a property on it? Maybe they even get some livestock. I've got a few friends still back home who manage those types of properties. Is that still something that people are interested in, or are they sticking to the more basic types of properties these days?
I think that's where that 800 to a mil marks there's a lot of people that think that they can do that for that 800 to a mil, and it doesn't seem that stock's kind of prevalent on the market at the moment. But yeah, I see lots of people with ambitions to kind of move to the outskirts, the Glenbervies, they call it the Golden Mile, which is heading out towards Ngāru, Kamo West and beyond, those types of areas. But the stock's not there in terms of that price point, and I think people don't realise what they need to spend to kind of achieve that. But absolutely, I think that's kind of the ideal for a lot of people, because we're quite blessed here in Whangārei, as you would know, Nick, that to achieve that balance of lifestyle, to have a little bit of land but not too much land, and have a hobby farm, is actually really achievable with a 10 or 15 minute commute to work every day. So it's actually really appealing for a lot of people.
Yeah, no, absolutely. I can understand it. And as I said, some friends of mine have done it and they absolutely love that. It's sort of halfway between, right? You're not living off that, but you're not having to live right in town either. And especially mates that grow up with kids, they certainly see the benefit of having all that space, of course. So yeah, absolutely makes sense to me. Before we move on, because I'm keen to talk about the lending environment shortly, but I just want to touch on the commercial side of things too, maybe some of the commercial loans that you will have been doing. What's sort of happening in that space? Because, we've heard about some of the struggles that the businesses are going through. They're obviously struggling with increasing interest rates and increasing costs and having to, maybe shoulder some of that burden of those higher costs, not being able to pass them on to their clients. How does that play out in the lending space? Are you getting businesses still coming to you for money? Are they looking to invest in their future? Are they being able to, operate at a high level and continue to hold on to staff? Maybe most importantly, how's the conversation going for you with those business clients?
So that's a real mixed bag, that one, because there's kind of lots of different industries at play, and not all industries are kind of affected by the current climate. I kind of feel like business commercials are a bit of an interesting kind of topic because it's nothing's the same. So it's the industry that you're in, the type of person that is running their company, what sort of support staff they've got, what's the profile of their client, what contracts have they got, what's their forward work like. There's so much that goes into a deal like that the current economic environment is kind of always going to be a factor. When the bank's looking at a deal like that, it's a factor now because we're in kind of a slower time. But when we're writing these types of transactions, we've got to mitigate against the fact that it's going to be a slower point at some time in the future for these businesses anyway. So it's more about that bigger picture. So that it's kind of a grain of salt, I guess, whether or not the current environment specifically impacts on a deal or not. It's more about understanding the business, understanding the people, and then understanding the forward position. So I'm seeing a lot of deals at the moment where, yep, they've had a crappy year or two or three, but it's more about what's going to happen in the future and kind of the decision making that's kind of happening, because often it's a really good opportunity for businesses that are going through this time to kind of demonstrate their resilience and their good governance and, the steps that they're taking. So I'm seeing businesses that have been holding on to staff and almost kind of operating like a charity. They're not making as much money, but they're keeping people employed. But some of those businesses are getting to the point where, okay, yeah, we've been doing this for a couple of years, guys, and we can't continue, and they're having to make some harder decisions. But other businesses are kind of trading through, and some of them are diversifying their business models into different sectors to kind of attract more work to keep their guys busy. Like anecdotally, I know of a company who started making fireplaces just to keep their fabricators kind of doing something, and then they're selling them. So there's kind of, that's really intelligent and kind of important in terms of a profile for a bank, because they can kind of see that the people that are making those decisions are really kind of savvy and resilient and open to kind of working with what the market's doing. So for me, getting to work with those people is really interesting, because understanding, if you've got their resilience and that drive to kind of work within the market is a really fun story for me to tell, and to kind of partner with that is super cool.
100%. I mean, that's the stuff you want to hear, right? Is that, yeah, in tough economic times, you've got to be innovative. You've got to try some different things. You've got to, and you got to figure out how you're going to be able to sustain yourself, because you do know that better times are coming. You've got to make sure that you're still existing and ready to thrive when that happens. And yeah, the best businesses will absolutely do that, right? They will find a way to exist. And if that means branching out, then hey, I love to hear it, right? And especially if a country that's, lots of small and medium enterprises, it absolutely makes sense that those that do that the best will be the ones that thrive later on and can support themselves through those tough times to thrive later on. So no, that's a great story as well. And I think that, that probably, tells me, I think, a lot about why you enjoy that part of the industry, why you ended up going that way on the banking side, right? Is that there is so much detail there. And it's great to hear, I think, that, as you say, it's more about talking to the business about them and the details about their business and their people, rather than worrying about the stuff they can't control, right? The economic environment they're in, the geopolitical side. Man, you can't control that, so you've got to focus on what's going on for you. And really interesting also that anecdote about the what we call, I suppose, labour hoarding, where yeah, we've heard lots about people just going, we want to hold on, we want to get through to the good times, and we don't need these staff later on. So if we can look after them, we're good to go once things get better. So yeah, totally makes sense, and yeah, good to hear your experience through that. Let's get into lending experience then. Look, I think we can't have a conversation today without talking about the official cash rate, because it was only a few weeks ago now since we got the hold from the Reserve Bank, but it was a pretty cautious hold with expectations that the official cash rate will lift in July, so less than a month away now. How are the conversations gone with you from a lending perspective? Are people, really onto it? Do they know really clearly about the official cash rate? What's their expectation for the future? Are they now tending to lock in a bit longer? And what are your expectations for what we'll see from you?
Straight. I think like in the entire time that I've been around lending money or having these types of discussions, I really kind of feel like this current environment, it's just so hard to really feel confident about giving good advice because it's so hard when, inflation's, they talk about inflation pressures, but the inflationary pressures kind of primarily being driven by geopolitical factors that you can't control, and that's all underpinned by this. If you look at December, we're all kind of thinking that things are going to start improving, and we were kind of going to start enjoying some more economic prosperity, but instead this random war kind of started, and now we're all having to pay 3 times as much for our fuel, and that's having this impact. And I mean, traditionally when inflation goes up, the OCR goes up as a response to that, but when we have a weak economy and people are kind of struggling already, like how do you justify that? Like it's really hard to kind of feel confident about giving people a good, something that you really feel confident about in terms of a strategy. But what I will say is there's kind of three patterns that are emerging in terms of clients that I'm talking to. There's the really confident, I'm going to kick the can down the road for 6 months kind of client, and they're kind of seeing that the short-term market isn't changing too much and that those interest rates are low, and they're saying, I don't think it's going to change for the next 6 months, so I'm going to fix for 6 months and then deal with it in 6 months. And to be fair, clients that are doing that probably are benefiting from some short-term interest cost savings as a result. I guess those people are expecting that the longer-term interest rates are high in part because of geopolitical uncertainty. So if in that 6-month period that kind of becomes more certain, then you should see some softening in that longer term outlook, which would mean that that person would be well placed to capitalize on a longer term lower interest rate. So that would be one client, and that's a really brave strategy. But I'm definitely seeing people doing that. I think the flip side of that is I'm seeing a lot of people that are just fixing for 5 years, and they're just going, look, I just don't want to know. It starts with a 5. That's not terrible. I don't have the cash flow I'm not resilient enough to deal with risk. So I literally cannot tolerate a higher interest rate if it goes up 1 or 2 points. So or 1 or 2%. So those guys are fixing for longer term. And I think that's good, especially if you don't have the ability to be a little bit resilient. I think fixing long term is a really good option. And then there's the kind of middle of the road, little bit of this, little bit of that. So, not wanting to fix long term, not wanting to look at a short term because it's not safe, but kind of either fixing for that 2 to 3 years and going, okay, well, I think that's going to, at least I can shift that mark out a little bit. It's not as high as the rates aren't as high as the longer term, but it's kind of a sweet spot in terms of 2 or 3 years before I have to think about it again. Or, you get the ones that kind of fix a little bit here for 6 months, 12 months, 2 years, 5 years. And their strategy, I guess, is more around exposing themselves to different markets so that they're not kind of in any one, they're not, if interest rates go up a lot, they're not kind of exposing all of their debt to that time, which is also a really kind of solid strategy. I think in terms of OCR, I personally don't see the OCR creeping upward at a really fast rate. I think we're just going to see that slow, stagnant. Maybe it'll go up, maybe it'll stay. I don't see anything crazy happening. I think it's just going to continue as it has been, like kind of stagnant, slow, incremental change. Maybe it'll stay the same, maybe it'll increase, but not by much.
Yeah, I think the Reserve Bank's shown a level of cautiousness and waiting for more information. So I tend to agree. It does feel like we're going to get that lift sooner rather than later, rightly or wrongly. And yeah, I know some people out there got some pretty strong opinions about which way that should go. But I think it's a good overview in terms of, as you said, the choices people have, right? And I think it also stresses the importance that it is personalized, and it's often based on personality, right? That, yeah, if you are a risk taker or you're someone that does feel like I just need certainty and I need certainty for a long period of time, then you're going to have a very different selection or outlook. And I suppose that must be also something that's quite rewarding for you, just to be able to tease that out, right? To go, here, I'll ask you some questions. You tell me what is important to you, and then we can arrive at the right strategy for you. So I think that's what your overview there really does quite well, is to show that, yeah, there's no one way for everybody. It's going to depend on your situation, and that situation is so varied based on personality, age, family situation, all those expectations on future, maybe a bit of gambling on how they think things are going to go internationally. Not that I stress to do that, but certainly that some people will be willing to be, strongly minded on that too. So yeah, I think it's a really good overview on how to go about that conversation anyway, how to go about that decision. On the lending side, how much debt to income conversations coming into your conversations with your clients, or is it more still about loan to value ratio restrictions? I know that we always like to stress in every opportunity that over half of all first home buyers get into the property market with less than a 20% deposit, and make sure that people recognise that that is always available for most people. Do you find that something that's used a lot up in Whangārei? And yeah, how's that DTI conversation being thread through things these days?
To be honest, DTI is probably less of a factor in terms of my conversations as the LVR, your deposit conversations are. Like, I think DTI, I haven't had it come up to the extent that it's caused an impact in terms of, so some banks have, if your DTI is over a certain level, then you have to meet a minimum UMI threshold, which is that amount of money that you've got to have left over after you've met all of your financial and all of your living costs and things that you need to meet in terms of your loan application. So that hasn't come up for me. It's more, to be honest, it's more around that deposit. And yes, you're absolutely right. In terms of that first home buyers market especially, then most people are borrowing over 80%. Yeah, DTI is not a huge thing for me. I remember when it came in at the bank too, it was kind of like a bit of a backup. But I really personally feel like the deposit requirements seem to kind of capture the DTI aspect kind of by default.
Yeah, absolutely. Especially when you bring into it the testing rates. Of course, with banks mostly testing you, 2% above the actual rate you're going to secure. And I think between all that, it kind of all adds up. I think also it'll maybe change as we see prices increase eventually in the future. And that's when people are going to start to test those DTIs. I know that when we look at the Reserve Bank data, it's still well contained. We sort of thought, probably it would have been December last year, that we thought it would become more of a conversation this year because we expected that momentum in the economy and property market to flow through to increasing prices. Because that hasn't happened, I think it's delayed that conversation. So I think it is still one for the future. But yeah, that absolutely makes sense that it's not necessarily, coming to the fore right now. All good. Well, I thought I want to chat a bit about the industry in general, just to sort of round us out here. But is there anything we've left alone, we haven't touched on yet from a lending perspective or the property market that we might have missed so far that you wanted to cover off before we sort of jump into some of the industry stuff?
So I think we've kind of covered the key interesting aspects that I can kind of think of.
Yep, no, all good. Well, then on the industry, as you say, you've sort of been in the industry for a while through the banking side of things mostly, and then more recently in the advisory space. I'm really interested to know, like, how do you reflect on what the most important thing is when you're dealing with clients in terms of that conversation, in terms of how they can best prepare for a conversation with you? And let's stick to the residential mortgage lending space here. What sort of jumps out at you when you think about the most important thing for that conversation?
I think it's really about being organized. So I think, like, if you're starting to think about, my daughter's going to be 5 next year and I want her to go to this school, I want to look at a property in this area. Having that conversation early can be really helpful to kind of get that process underway. Like, I need to have this deposit saved, or I need, this is what my loan repayments are going to be. Is it going to work? Do I need to sell a property? Come in and talk to us, or, go to the bank or talking to a broker or whatever to get some advice and to talk about what your options are can be really beneficial to kind of get you on that pathway to what you're trying to achieve.
Yeah, absolutely.
Yeah.
I mean, if I plugged it, it's you've got to do a little bit of research, right? And if you do that research yourself, you're ultimately going to end up going, I need to talk to someone through this. And I think there's no one, no people better placed than those that do the lending themselves to, know that whole process from end to end and be able to coach you through it. So yeah, that absolutely makes sense. Otherwise, I think, the other one I want to reflect on, you sort of touched on it right at the start, but I'm keen to understand, like, if you got asked about your experience from moving from the bank into the advisor world, do you have any like core tips for someone thinking about doing that? I think I'm always going to preempt you and go, you're going to say just jump into it, right? Which is what you did, and you found your way. Is there anything else, like the tips that you would have for someone that might be considering going independent like you have?
Make sure you've got some savings. No, I think, like, I did have a business plan. Like, jumping into it. But I think kind of understanding fundamentally where you want to sit in the market can be helpful. Understanding, I guess, what you stand for and what you're interested in, so you can kind of work with those types of people, and I guess not undervaluing your skill set and your experience. So I think really making sure that you do those things and you let people know that you're there and that you want to help, I think is that, shame. I sent an email to someone once and I titled it shameless self-promotion, but it really is, because if people don't know that you're there, like, how are they going to know how amazing you are? So I guess that would be something I would really recommend is making sure that you're kind of really clear about your strategy, that you do some business planning, but also that you do go and knock on those doors and let people know that you're there and that you want to help.
So hard for the humble Kiwi, right? To put themselves out there, to tell people they're actually good at what they do. And I think, for so many people, suffering imposter syndrome too, going, oh, yeah, I do it every day, but yet they wouldn't back themselves to do it out there on their own. So yeah, I do think it's a good way of putting it, because we are too humble. We don't back ourselves enough, and someone's got to get out there and do it. And self-promotion, as hard as it might be, you got to get out there. But I think that's where the connections help, right? And I think that definitely comes through, that if you're already out there in the community and you're talking to people and you like helping people, then it's the sort of area where absolutely you fit nicely. So yeah, I think that's where you squarely sit in that market anyway.
I think in terms of me specifically, like my community interests, like that was like a really random beneficial, it was beneficial to my business, but not intentionally. That was kind of like
Yeah,
a
yeah.
genuine kind of thing that came out of the fact that I love doing community work and I love helping people. And I was actually having a conversation with someone last night. I was at a board meeting and I was talking to someone else who's quite heavily involved in so many different things. They do search and rescue, and they're just amazing person. And he said, what did he say? He said something like, it's your energy, like you're just that way inclined, or you're not. And if you are, like, if you're someone that really gets joy from helping people, it just kind of happens. And I think, like, for me, I get so much joy out of the stuff that I do with my sport and the stuff that I do at school. And I think that kind of naturally means that people can see me helping them there, so I can help them here too. And I do. And sometimes I think I get a little bit too invested. But it's because I really,
You care.
yeah,
Yeah.
I
No,
do.
I think it's a really interesting point, especially the trajectory you've gone. I know if someone started out in the real estate industry or they started out in the banking industry, they would be told to go and put yourself out in the community. You've definitely gone the other way, right? You're firmly embedded into that community, and then you've actually just, selected an industry or selected a job that can benefit off the back of that, as opposed to the other way around. So yeah, it absolutely makes sense. And as I say, when it comes natural, it doesn't even feel like a job for you, right? You're just talking to people, and oh, did you know that I could actually help you to buy your first home? That just sort of comes out the back of it. So no, I love the way you've put that. Love the way it comes across. All good. Well, but that's pretty much going to do us for today. I'm keen to just make sure you get a chance to plug yourself anyway. How do people get in touch? Are you active on social media? Do they just go to your website? What's the way that people can get in touch with you if they are in that Whangārei market and want to get hold of you?
So if you just Google amazing mortgage broker Jemma Scott-Davidson, I should come up, or business finance Jemma Scott-Davidson. Yeah, just Google my name. I'll come up, and you'll see my office address and my phone number, and yeah.
Yeah, and go and have a chat. I like it.
Yeah.
No, that's amazing. All right. Well, look, that pretty much leaves me to say just thanks very much for coming on the podcast. I don't know if you've got any final words or any final thoughts before we close out today.
No, thank you very much for having me. This has been a really fun experience, and yeah, I really hope that some of what I've shared can help some people. And yeah, thanks.
No, you're very welcome. It's great to have you on. We haven't done one of these for a while, so it's nice to get back in touch with the likes of yourself out there in the industry, hear what's going on in your world, and really appreciate just your openness and candidness. So thank you very much. But that just leaves me to say thanks very much for listening. Please do get in touch with any questions or thoughts for future podcast guests or podcasts we could be doing. My details are all there within the podcast player you're listening through right now. Just leaves me to say thanks again. My name is Nick. She's Jemma. You've been listening to New Zealand Property Market Podcast. Mā te wā.